So, Wednesday,
that's
oil.
right. It is oil day, so we have our EIA numbers coming at 10:30. It's just after 10:20 Eastern time. Let's jump over to the NADEX platform. So we have the crude oil May contract up here, currently trading 64.48. Okay, so just under 64.50. 10:21 on the dot. We got about 9 minutes till those numbers come out for the inventories. So I was jumping around. I jumped to the 11 a.m.s first, as in the 9 till 11s. Okay, these are expiring at 11.
And we're looking for a volatility trade.
Yeah, so what we like to do is find a spread with bullish potential, maybe buy that, find a spread with bearish potential downwards, sell that, right? And then you have exposure both ways, regardless, and you're just looking for volatility. Now, again, if you're just bullish or biased, you can just buy one or other of these. Now, the 11 a.m.s are going to line up. We could use either 64.75, could be our point. You see, we have a bearish spread going down to 63.25. We have one going up to 66.25. It's about 25 cents away. But I jumped in ahead of time, and the noons, which is nice because you have an extra hour.
Is big.
And these line up actually perfectly with 64.50. Okay,
so right where we're trading.
Yeah, we're a penny and a half away from there. So, to lay out the example that we could take a look at, here's your 64.50 up to 66. We could buy this spread. Okay, now this is going to be costing us, it looks like, about $28, $27 as we tick around, and that's all premium. Because we're right at the bottom end of this spread, okay? And then the bearish spread, and I already know, since we're right at 64.50, it should be identical. Because it's just premium, There's no intrinsic value. Now this is jumping around. Now the bearish one's going to have about 4 pennies of intrinsic value, okay? So call it $27 times the 2, $54 about. Okay? And oil has had some volatility.
It has.
In context, that's a little expensive, and it's just expensive probably because there's more volatility priced in there because the market's been jumping around.
Well, it got over the highs yesterday. Couldn't take it. It went to 66 something yesterday.
66.40, I think it was up there. So, and again, if you're just bullish or bearish, what's nice in these is that you could purchase either of those for $27 on just one side, just a layout. But it is nice when you don't have to have a direction if you don't want to. You just have to be bullish volatility coming into the news, okay? And that's where we like to set it up. So again, we're just about 4 pennies away from the number. Now, as we're 4 pennies away, we're in the bearish side of that, so we'd have value to the negative side. That's why that one's going to be a little bit more expensive. And you can see how they shift a little bit. But still, relatively, you're looking at $55, okay? You're just getting a little bit of a shift to where the...
5.5 pennies, folks.
55 pennies, right? 55 pennies.
Sorry, yes.
Away from 64.50. So for simple math, you know, you would need anywhere, you know, just slightly above $65, you start to break even, or slightly below $64, you start to break even, and you have value anywhere away from 64.50. So let's just take a look and see how these 230s line up. Yeah, so those are going to be using a price point of $65, okay? So that's where, you know, you could make that trade, but just for an example, your bearish spread is going to have all the intrinsic value. It's going to be heavily bearish, you know, because if you wanted to then offset it with the volatility one to the upside, you can see how, man, you got to go all the way to 65 before you start going... and getting any value, so it really becomes a pretty bearish trade when you're that far away from the strike price. So we laid it out. We have about $54 for both of those contracts. Price of oil is trading about 3 pennies under 64.50, 64.47. And yeah, to back it up, I mean, we did have some big time, and there it is. So we were up at 65. Is that
66, I think.
Yes, thank you. 66.32, 66. I mean, we're up there. You know, we're about $2 off of that level, and that's only going back to yesterday morning. We're talking about barely 24 hours for sure. So the news comes out in 5 minutes. If you want to make that trade, you're risking about $55 both contracts, and again, every dollar being about a penny, so 55 cents away from that price point.
Cool.
We'll see 5 minutes till the news.
Totally. Welcome back, folks. So let's take a look at this.
So, top line number, crude oil inventories rise 1.64 million barrels. And there's a bunch of it different, you know, there's a Bloomberg user estimate, there's a median analyst estimate, but one of these at least was that Bloomberg users expecting about a 750,000 barrel rise, okay? So we had 1.64. Now we have gas in there as well. Gas inventories falling 3.7, but that's going to be a headline number in crude. And let's jump back over to NADEX and see how that market's reacting. We'll jump into our crude and pull up the chart so I can see 64.60. A little bit of volatility, nothing too dramatic quite yet. We were trading at just under 64.50, right, when those numbers came out. And so we would have had value anywhere away from 64.50, basically 64.50. That is your max loss because each contract is going to have value, the bullish one from 64.50 upwards, bearish one from 64.50 downwards, 64.50 being your max loss. And yeah, and what to pull that back real quick, so here are the numbers again to get into them. So you had Cushing crude up 1.8 million barrels, PADD 3 crude down 5.1 million. Gasoline came in at a decline of 3.4 million barrels. Estimate was about a decline of 2.3.
We're using gasoline.
We definitely are. And yeah, you know, but the headline number is that you had more crude than kind of the estimate. And that's interesting that as we jump back to the platform, getting a little bit...
Because the products we used, you know, versus the crude,
There's
right?
a lot of numbers that come out right at 10:30 in terms of demand is in there, right? Everything in terms of output, production, let alone just the inventory numbers. So currently 64.68, about an 18-penny rise, and as we talk, as it climbs, we'll see where we go. We're just up at what, 66.40, so it has some room to run if it might catch a bid. But we'll check back in and see how that oil market reacts.
Sweet.
Definitely.
And that's yeah. On one side of the volatility, you were basically getting a little bit, right?
Yeah, for sure. I mean, right now, you know, again, anything above 64.50 on the bullish side is going to have value. So you're looking at about 25 cents, which would be $25,
right?
Give or take. And to back this down again, we're looking at the noons.
Yeah.
Here would be your bullish spread, okay? And there's still some volatility in here. So even though it's at 64.75, if you wanted to close this out, you'd be getting some of that premium,
which is cool.
That's it. Yeah. So right now you could take $35 off the table if you wanted to.
Of the 55.
Yep. 37, call it right now, even as it keeps climbing. Look at that. Look at that market
cool.
as it keeps rocking.
Right.
Man, I can't even keep track of it. So now you're up to almost 44, okay?
Yeah.
And, you know, let's say you were more bearish than bullish. If you were, you could take that trade off, cover a majority of your investment.
Yes.
And then if you got that reversal that you were looking for, because there was more oil than they thought.
Right.
Headline. I mean, that should be, you know, more supply.
Yep.
Prices should come down on just a straight economics of it. But that remains active until noon, you know, either way, depending on what you want. But
which in this market in general, noon is like 3 or 4 days away.
We're only 3 minutes away, right? And look at these are 5-minute bars.
Right.
And you know, if you're doing these trades, if you're making these trades, you want to be quick because I mean, check that out. We were just up to having $44. We're now back to having about 32, 33. On a percentage-wise basis, that's a big number. When you're talking about,
it definitely is.
And you can see the spikes and the moves. All right, so we're 4 minutes into the news, and we had 90 minutes in that trade after the news, so we'll see where. We'll check back in. All right, so let's check back in on our oil. We've got a little bit of volatility. So, oh, jeez, that is a surprise. So
Look at that.
I was going to mention that we had gotten some volatility all the way above 65. Again, these are 5-minute bars. We hadn't checked back in a couple minutes, and man, quite a reversal.
Look at that.
So the first move is not always the move that carries. We say it sometimes,
Isn't that
and today
intense?
that comes to fruition. So pretty interesting that I was remarking that one of the strategies you could employ, right, is if maybe you were a little bit bearish, you could take some money off the table, even if you didn't cover your entire investment. But guess what? We got up to the level, we just weren't covering it, where you could have covered your entire investment. We got up to 65.11. That would have been at least 61 cents of intrinsic value. Right. Let alone there may have been some premium still in there.
You needed 55. Yep.
To cover your investment, and now to reverse things, so that could have been an exit on the bullish spread, okay?
Right.
The bearish spread would have been the one that was left open.
Yes.
And now you can see that already, even though we're at 64.37 as the price continues, if you wanted to buy that back, you would have $21 of value there, let alone if you wanted to let that run, whatever your market bias might happen to be. But man, some volatility for sure. Okay, we'll check back in 60 seconds, see where it is now.
We're only 14 minutes into it.
We are, 15 on the dot now,
we have, bottom line, folks, is that you get 90 minutes on this trade.
Right, as in you had 90 minutes at 10:30 when the numbers came, would have now 75 minutes from this point if you were trading the 12 o'clocks.
That's intense,
And if you decide to close out one, the other one, of course, remains active until that 12 o'clock expiration. pretty interesting, and it's not stopping. And what is interesting, too, is just that there was more oil than they thought. So intuitively, that should be a decline in price, right? But as we said, there's a lot more numbers that come in terms of imports, exports, gas, even regional production, imports.
Welcome back, folks. And oil 64.60 right now.
Yeah,
so
check back in one more time. So it's about 10:55 a.m. Eastern time now, 25 minutes since those numbers. And again, we were looking at the possible setups of the 12 noon trade. So it would have an hour and 5 minutes from right now. Still, they'd be active. Got quite a spike above $65, up to $65.11. Man, again, these are 5-minute bars, all the way from 65.
Seriously.
It's a good 60-cent bar in oil, and trade right now 64.54. So, be interesting to see how the next hour plays out.
Another 65 minutes. Exactly.
You got
on
it.
the trade.
Exactly. So to check back in on oil, it is 12 noon Eastern time. Those contracts we were taking a look at would have just expired, and quite a move. I just wanted to update that trade that we were potentially looking at. That would have been a volatility trade. Here's the 10:30 bar. We were trading just at about 64.50 prior to that news. We spike all the way above 65.11. And then we pull back to that level, and right at 11:30, check out that slide. We go from 64.60 all the way down the 11:55 bar, closing at 63.86, which would have been a solid 64 pennies away from that 64.50 price point that we were using. Either way, pretty remarkable price action in both directions. Volatility trade would have been a good one today. All right.